So in today's video, I'm going to talk about the greatest shift that's actually, there's a massive shift that's taken place right now that's literally going to push us into recession. I'm going to show you this and why this, which is the interest rates and the yield curve, and what the yield curve is actually really telling us about the coming recession. But also, I want to share with you what's happening right now in the actual stock market, right? This is the stock market right here, the actual stock market itself, why the stock market right now could be literally an amazing buying opportunity and why you shouldn't be freaked out about the market having gone through a big crash. I'm going to share with you the exact number 1 pattern that actually happens in every single stock market top. I'm going to go through 1929, 1987, 2008 to 2021 Bitcoin. I'm going to go through all these major top crash patterns today to share with you why you shouldn't be worried about this and what to expect and why we're probably likely to find a bit of a support here soon and have a big rally. And also I'm going to tell with you exactly the exact number 1 pattern that forms when at the top of 1987, at the top of 1929, 1962, 2008, you can see all the different patterns there. This is the number 1 pattern that forms out of every single major crash in history. So if we are going to go through a big crash, this is the exact pattern we should be looking out for. And in the meantime, do not be feared about this here because we're likely to have a really big, strong bounce. And also what's going on with gold, and also this is silver here, what's going on with silver, and then also gold, and why gold is still a very strong upward trend and we shouldn't be fighting that. There's lots to go through, so let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So traders, right now we are getting a lot of downside movement out of the markets, and I want to just share with you some things I think it's important to understand when we're seeing these markets and what's happening right now from here. And that's what I want to focus on. I firstly want to sort of cover probably what I actually had on the thumbnail, and that's this interest rates here. And the reason why I believe it's the greatest shift is there's a massive shift that's taken place right now, and that is the interest rates are really starting to change. Now, this massive shift is going to push us into recession, and what I mean by that is this, okay? Bear with me here for a minute. If I bring up, I'm going to bring up, is this the one here? No, not that one. Not that one, John. This one here, right? So let me show you here. So let me bring on I want to bring on the yield curve here, right? So I want to share with you why this greatest shift is going to push us into recession, and what that is this, right? What that is let me bring this up here, okay? So this is the yield curve here. And just, I'm going to get to this in a minute. I'm going to get to gold. I'm going to get to silver. I'm going to get to the markets. So hear me out here, okay? Now, one thing, as on the back of what I'm just saying here is that as you're trading the markets, okay, the first thing I really want you to understand about these markets is we always want to have a really good context of what's really going on in these markets. And the context is this, is that we do know a recession is coming, and so if I bring in, oh, I'm looking to buy some motorbikes here for me and my daughter, which is quite cool. Isn't that quite cool, guys? Like, I have a daughter that she's 15 years of age, and she wants to go bike riding with me, motorbike riding. And so I'm looking to buy some dirt bikes and a trailer and stuff like that. If you guys do ride dirt bikes, what sort of dirt bike do you recommend for my daughter to start learning on? I've been riding bikes ever since I was a kid, so I know how to, I don't think I started on a 125 or a 250. You know what I mean? Like, what do I start on? Do I start on like a 49cc or something like that? Like, anyway, if you guys do ride dirt bikes, please leave a comment in the comment section below. Let me know my daughter's 15. She hasn't rode a bike in her life, so she's just brand new. What do I start on? Do I start on a PW50 or what? So anyway, you guys that ride bikes, please let me know. Back to what I was talking about here. Focus, John, focus. So back to what I'm talking about here is that we do know that a recession this shift now is going to take us into, the shift is going to push us into recession. And that shift is, we're starting to see what? We're starting to see the interest rates here from the 10-year and the 30-year. Guess what? We're starting to see that come down, right? And now what's that going to cause? As this is starting to come down through here, it's going to start to cause a shift in the yield curve. Okay, so really simple. What that simply means is this, just to keep it really simple, because I'm not smart, guys. I'm not smart at all. I know how to trade these markets, and I know just a little bit of thing about these markets. Okay, so anyway, so we can see through here, right? Look at this here. We can see here. Oh, by the way, just before I get into that, you don't have to be smart to trade the markets. In fact, I find the people that are really smart around these markets, they know so much about everything. They're the worst traders because they have the paralysis analysis, right? These are the ones that are just, they're the ones that it's just paralysis analysis, right? Like traders, I'm not sure if you know, but obviously I'm good at what I do. Okay, I do have losses in a row, right? I'm actually in some small losses right now. So, but I do have losses, right? But for me, traders, like when I was 2 years of age, my real father used to kick me against a brick wall, and for so long I hated school and I just couldn't pick things up on school. And the reason why I couldn't pick things up is because my mum didn't tell me until the last 5 years that when I was younger, I actually had brain damage. And she didn't want to tell me that. And I was actually more like 2 to 3 years behind where everyone else was. And so that's one of the reasons I was always labeled ADHD at school. And the reason why I hated school is because I just couldn't get it. I could never understand what the teacher was telling me about. Even the dumbest people in the class were smarter than me. You know what I mean? So the purpose of me saying that is that this guy who was labeled ADHD and I had brain damage, who was 2 to 3 years behind everyone else. If I can do it, you guys can do it as well too, right? And that's obviously what this channel is all about. The channel here is just to really sort of help you, and not to say I'm the best and so on and so forth, but I just share with you some things that's really helped me, okay? So if you think you need to be smart to trade these markets, I think you thinking you need to be smart is probably the biggest thing, right? And so anyway, Back to, I just wanted to share that with you because I know a lot of people who trade the markets like, oh, I'm not smart enough. It's like, I barely finished school. Anyway, so the yield curve is about to uninvert right now. Okay, so that means the recession is going to, we're going to see a recession. Now, it doesn't mean the recession is going to happen straight away, right? If you look back here, it inverted. When did it invert? It inverted. It started to uninvert back in 2000. This is uninverted. Started in June 2000. Around about June, July. Say August of. Yeah, around that. What's that? Yeah, around that June, right? I have to say June. Yeah, around August, June, and the actual recession started August. What's that? I'm trying to do. I told you guys I'm not smart. I'm trying to do the months here, right? So you can see here. Say August, September, October, November, December, January. So around February, March was when the recession started. That's 5 months. Is it 5 months? I told you guys, I'm hopeless. Right? I'm hopeless. So what's that? June, July, August, September, October, November, December, January, February. Yeah. So 6 months. All right, guys. All right. I'm trying. Remind me not to try to do math on a video while I'm trying to record. Anyway, I hope you get what I'm trying to say here. Okay. On all serious basis, guys, is that yes, we know we're headed to a recession, but we still may have another 4 or 5 months of good bullish movement before we top out of the markets, right? So just because we're going to go into recession, and there's a lot of fear now in the marketplace because the market's dropping, right? Fear. So on a fundamental level basis for us guys, I hope you just can see here, like we can see it through there, right? We can see that we haven't even uninverted yet at the moment from the 10 to 1 or even 10 to, we're almost getting there, aren't we? Look at this here. Let's actually bring this over here. Oh, we're almost, right? We're almost about to become uninverted, right? Almost uninverted. But once again, look at this here. When did it uninvert? Here, the 10 to 2 year. June 2007. The recession started when? What's that? More than 6 months. That's when the recession started, right? of February 2008. You get what I'm saying there, right? And we all know what actually, from June 2007 to 2008, that's when the recession started. So if you're worried about a recession coming, yes, it's coming. We don't know exactly when, right? Let's go back to here in time. So when did this happen here? So it uninverted when? It uninverted. All right, let's go back to here. So it inverted and then uninverted around 2000 and... So uninverted around the, say, what's that there? About, so say December 2000 or January, definitely uninverted of January 2021. And the recession started when? About 4 months later, right? That's when the recession started, and so on and so forth. So the reason why I'm bringing this up here, guys, for you, for watching, is because I want you to become good traders, right? And unfortunately, to become good at trading, a lot of it is not being infected by so much out there. Because as you know yourself, right? As a trader, there's so many times in the past I've gotten sucked into the fear of, oh my goodness. And then, but the market is like saying, hey, this is just a normal thing here. Because the reason why I'm bringing this up right now is, yes, this greatest shift right now is going to push us into recession. Why? Because it's going to complete uninvert now, the yield curve. Massive shift is going to push us into recession. And so that's what's happening there. But it doesn't mean, and if I go back to the good old stocky market here, this is a good old stocky market. This is the S&P 500. It doesn't mean that we can't keep going up. Now, what's the most important thing here, okay? What's the most important thing? The most important thing is what? The most important thing is what the market is doing. And the reason why I'm bringing this up here is that we don't want to be so freaked out that we're going to miss out on some opportunities, right? And so if we have a look at, let me do this here for you. Right, so let me show you this here. I want to bring up now a chart that represents most of the big crashes that we've actually had in a lifetime through here. All right, so this is actually a lot of different things here. It's just, this here, guys, is one of the most powerful patterns on the planet. Anyway, I love it. If you need some help with your trading, guys, you can see those details in the description below. Also, I'm running a 90% off sale to the Master Trader Lab if you're interested, as I'm finding this thing here for you. All right, so I'm trying to find the crash patterns for you guys, okay? Again, all those details. If you want to learn my trading system for free, you can do that, yeah. You want to apply for coaching, you can do that as well too. And 90% off my Master Trader Lab. All those details in the link in the description there. Anyway, I'm trying to find, where are you? Look at how many, I've got so many screenshots here. And now I'm trying to find there's a crash chart. Wait, crash chart. All right, so I'm just trying to find this crash chart now for you. I'm just doing this on the fly, actually, as I'm doing this video for you. And the reason why is I want to share with you what normally happens at tops of markets, so you can either so you can not be freaked out. Here, not be freaked out, and B, know what to look for if we are going to go into recession, right? So what happens in every single big market crash we've actually seen in the last 100 years? What has happened, okay? Because if we can know what has happened in the past, what we can do, it can give us the power back to stay emotionally calm about what's going on right now. So if your fear right now is that the market is going to crash, market's just going to go straight down, let's actually see how do actually major tops form, so we can get a really good understanding of what's going on. And why I truly believe that we're actually at least getting we're at least likely to get a bit of a bounce. Now, what happens with that bounce is we'll see what actually happens here, right? So look at this here. So with every stock market top in the markets, if 1929, what ended up happening here? What do we do, right? We actually went down. We actually had a bounce. We created the lower high and we broke the low. See that here? Lower high. And then that's what that there was the 1929 big crash through there, right? That's the 1929 crash. What did the 1987 crash do? It came down, just like we're actually doing right now in the indices, right? But look what ended up happening. What did we do? We actually got a bounce, didn't we? But we bounced and we failed to make the high. and then we rolled over, and then we rolled over and we broke the low. So we made a lower high, breaking of the low. If we go higher low and we do that, and then we make a lower high and we break the low from there, that's where the sellers are. This is now sellers in control, right? We went from buyers in control to sellers in control. This is trend analysis. This is the reason why trend analysis is so important. If you want to be on the right side of the markets, right, most of the time, then trade with the trend. And if the trend starts to show a lower high and breaking of lows, what does that mean? That's the reason why do you notice the 1987 big crash happened after that pattern formed? 1962, what ended up happening? We came down, we rallied up, and what ends up happening here, if you actually notice this, guys, check this out, right? If I draw this, let me see if I can get let's go margarita, right? So I'm going to draw the line down through there, down through there. But notice what ended up happening. When we did bounce, where did we retrace? We actually had about a 50% retracement, and then we actually then we created the pattern, right? 50% retracement, and then broke the pattern. What happened here? Dropped down. We actually came back up. 50% retracement of the high to low, came down. Once we broke the low, you would know, oh my goodness, definitely something is now changing here, right? Look at this here, 2008, look what ended up happening. Came down, we rallied back up, 50% retracement, and then we actually continue down, right? So as you can see, this 2008 stock, this here just looks like a downward market, doesn't it? That there was when the whole Lehman Brothers things and stuff and everything happened there. 1966 crash, what ended up happening? Look at this here. We had a big drop. We came back up. We actually retraced 50%. The 50% level held. And then we started here. Bitcoin. What did Bitcoin do? Came down, came back up, held roughly 50% level. We could not make the high. Then we broke the low. And now we're going down through there. So as you can see, that most of the time, apart from a pandemic, right? The pandemic, you don't want to class because the pandemic just happened just like that. Now we did actually break the low. What I mean is that we actually came higher, low, higher, low, higher, low, and then we broke the low. That means as long as we're making higher lows, the buyers are still in control, right? Because is the top in? Not yet. 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 You see what I'm saying here, right? It's not until we actually do that. So the purpose of me bringing this up through here is there's so much fear right now around what's happening in the markets. But do you see what I just did here? So if we know this, if this is, let's just say this is going to be the top. This is definitely the top, okay? This is definitely the top. Okay, cool. Let's actually go to the markets then. Now with what I just said there, what will happen probably coming over the next couple of months? We will start to get what? Let me zoom right in on the S&P. We would start to get what type of pattern? What type of pattern is that? Right? Look at this here. We'll get what? We'll get a bit of a bounce here, right? We'll come down a little bit, right? Now we will come up. We will retrace. We will start to come up through here, around about the 50% level. The 50% level will hold, and then we start to break down, right? Remember I said before about the patterns. We end up retracing roughly around 50%, and then the 50% level on the downside holds, right? So you can see here. Look at this here. Down, up, 50% held. 50% held. You get what I'm trying to say here, right? Roughly 50%. So if this is going to be a top in the market, one, we're probably going to get a bounce. Right now, as we speak, we are in a very big bull market, right? Very big bull market. And as you can see, look at this here. From a real big picture perspective, what do we have? Up, down, up, down, up, down. If we do get an up, and then we do start to get, say, this level through here at 50%, and then we start to roll over, yes, then we can start to say, oh, something is changing. But as I said before, I started off this video with the big shift. The big shift is going to push us into recession, but the recession doesn't mean we're going to form a top right now. And so those who are just really freaking out right now by these markets, this is a bit of a shake and bake in the markets, right? And this could literally be an amazing opportunity to buy, especially even on the Nasdaq. Like, look at the Nasdaq. The Nasdaq is still what? Clearly making strong higher lows. Strong up, down, higher low. Strong up, down, higher, low. Guess what's probably going to happen to the Nasdaq next week? We're probably not going to make a move up. When we do make the move up, what happens? Do we hold the 50% level, right? From there to there, what happens here? Because if we do something like this, when we go up like that, and then we roll over and we do something like that, yes, now something is changing, right? Something is changing in the markets. So just keep an eye at that, guys, when we're looking at all these markets out here. Just keep an eye on the charts, right? The charts, and this is where it's so powerful looking at the trend analysis, because the chart, if this is going to be the top, we will start to get the up, down, and here. But for now, guys, relax, calm. Let's not freak out, right? This is just this is just a very, very, very healthy bull market right now, right? And the reason why I'm saying that, guys, because there could be literally an amazing buying opportunity right in front of us. Right in front of us. So if I go to gold and silver now, if I look at the gold and silver market, what's happened with gold? Gold had a bit of a down day, but what's happened with gold? What is gold still doing? Look at this here. High, higher low, higher low, higher low, higher low, right? So gold would literally have to hold here, come down and break this low down through there to say that the buyers are no longer in control. But notice we've actually been stair-stepping up, stair-stepping up, stair-stepping up, stair-stepping up. So right now, a little bit of shake and bake in gold. Guess what? Right? And so see what I'm doing here as well too, guys? What am I doing here? I'm bringing this back to where? I'm bringing this back to black bars. I'm bringing it back to what the market is. And I'm not thinking about money right now. I'm thinking about what the charts are doing, because when you do that, you can start to have much better trading decisions, right? That's what it's all about. And I was just talking about that with my coaching clients today. I'm like, just saying, guys, we need to make sure we stay emotionally calm when it comes to all this here, right? So what's happening right now with the good old silver market? We're actually, again, a bit of a drop down in the silver market from here today. Let me just minimize you. Right, a little bit of shake and bake through here, guys, but no. Again, let's just focus on the charts. I'm looking at this here from the big picture. What's this big picture doing, right? Big picture say what? Big picture say up, big picture say down, big picture say, all right, let's bring a green. Where's your green? Right, big picture say up through there and then away, and then so therefore, guys, there's a little bit of short-term shake and bake right now, especially the silver. Look where the silver is right now. Silver is right at these major level of support, and this is a weekly chart on silver. Look at this here. Bam! Look at all that there. 1, 2, 3, 4, 5 weeks of resistance. 1, 2, 3, 4, 5, 6 weeks. 1, 2, 3, 4, 5. Another 5 weeks. And now we've just come back down to here. I wouldn't be so like worried about it. I think to me, I'm actually excited about this, because I'm looking for a really good buying opportunity right now, especially like the Nasdaq and stuff like that. Like, I do see this thing just being a real good sort of shake and bake across the market here. So guys, I hope this sort of gives you a bit of understanding of what's happening right now. And I wanted to do this video because I know a lot of people are freaking out right now about these markets and what's going on. Now, if you are, I spoke to someone this year, about a few months ago, and they said they're a leveraged long across all the indices. And Joel, if you're watching right now, mate, I hope you remember my advice to you. This is about a month ago now, I think it was, where you said that you're leveraged long across all the US indices, and I said to you, my recommendation is just to get out of most of them and just be leveraged long one, because if the market does go down, they're all going to go down, and that's exactly what's happened. So Joel, man, I hope that you didn't do this, because if you didn't listen to me, at least managing your risk a lot more instead of being 100% long in these markets, you are probably in an awful lot of hurt right now because of what's happening right now, and you're probably going to get out at the wrong time as well too. So anyway, traders, hope this helped you out. I'll speak to you guys real soon.